Forex, and this lesson is on candlesticks. This lesson brought to you by the Forex Portal's Discipline Indicator. Now, candlesticks. There are three ways you can visualize charts in MT4. You can look at lines. Don't know anybody who uses lines. You can use bar charts, or you can of course use candlesticks. I would guess 98% of all traders use candlesticks. So let's have a look more closely at candlesticks. How helpful are they in trading? Do you need to know what they all mean? Answers to those questions are yes, they are helpful in trading. No, you don't need to know what they all mean, but it's very useful if you know what the key ones mean. So let's take a look at some of the key candlestick patterns. So the first thing we need to do is take a look at the basic structure of a candlestick. MT4 supports any colours you like for candles, but conventionally we have a white for a bull candle and a black for a bear candle, or green for a bull candle, red for a bear candle. I personally use red and green. My charts look like this, but the choice is yours. So a bullish candlestick opens here, closes here. This is the high, that's the low. A bearish candlestick opens here, closes here. This is the high, that's the low. Very simple, and also very effective if you can read what these candles mean. So let's look at a few examples and I'll show you what I mean. Okay, so the first candlestick pattern that we're looking at is the bullish engulfing pattern. Now, this is a GBP USD weekly chart, and for 6 weeks the bears have been in control. This candle is opened here, it's closed here, the next candle is opened here, and the bulls have pushed right past the last week's open and gone on to take complete control of the price. This would have been a 2,000 pip move had you bought GBP USD on the strength of this candle or that candle. So bullish engulfing pattern, like all candlestick patterns, the significant patterns occur at the end of trends. So you're looking at a trend nearly all candlesticks are trend reversals, and bullish engulfing pattern is a strong one to look out for on your charts. Okay, so we've taken a look at the bullish engulfing pattern, and here's its cousin, the bearish engulfing pattern. Now, the previous chart, GBP USD weekly, is the chart we're looking at here. This is the uptrend. Prices then move sideways for several weeks before we got a bearish engulfing pattern and a strong move down, a move of over 2,000 pips down to the bottom here. These three candles, incidentally, are known as three black crows, red in this case, but that's another well recognised and well known candle pattern. So that's your bearish engulfing pattern. Next we shall discuss hammers. Okay, let's now take a look at hammers, and there are 4 different types of hammers. Strongly bullish hammers, bearish inverted hammers, and strongly bearish inverted hammers. Now this all may sound rather complicated, but once you understand how the open highs, closes and lows work, it's not difficult to understand. So let's imagine that this candle here is X. This is a strongly bullish hammer candle. So the price has come down to this candle, the price has opened here, and the bears have continued pushing the price down. They've got to this point though, the bulls have stepped in and they've pushed the price back up again, back past the open, to a new high and closed here. So this candle here would start here. So this is a very strong bullish candle. Now then, the next candle is a bullish hammer. So imagine that this now is X. The price is opened here, and yes, again, the bears have continued their trend downwards, pushed the price down to this low, but the bulls have now stepped in and pushed the price back again. Now they haven't managed to reach the open, but they've got to this point, so this candle is closed here, and this candle would start here. Right. Now, inverted hammers, you won't get inverted hammers at the end of trends. I mean, I'm not going to say it's impossible, but it's not really logical. I know that Forex can be completely illogical, so you will probably find examples of them, but you will not get, you certainly won't get an inverted hammer at the top of the chart. That's because they're not called inverted hammers, they're called shooting stars, and I'm going to deal with shooting stars next. So if you see an inverted hammer in the middle of a line of candles in a trend, it's an indication that it's a continuation candle. And let me explain this to you. So if this was here now, the bears again have opened this candle, the bulls have taken control of it straight away and pushed the price right back up to here. However, the bears have stepped back in again here and then proceeded to push the price back down again, and they've got as far as this close here, so the next candle would logically start down here somewhere. An even stronger bearish signal is the bearish inverted hammer, which again, following this example here, this was X, this candle is opened here, the bulls have pushed the price higher immediately, but then the bears have stepped in and they've pushed the price back down, back to the open, and they are now pushing the price past the open to this close here. So logically this candle will start here and be moving down. So this is quite a strong bearish continuation signal. So let's see if we can find some examples of these candles and the charts, and we'll see what effect they have. Okay, so the first chart we're going to look at is the USD CAD weekly chart. All these charts I'm going to show you are weekly charts, but you get candle patterns, formations on every time frame obviously. So on this particular chart we can see a very strong determined bearish trend down to this point here, and on this candle the bears have opened this candle here, pushed the price down to here, but the bulls have now stepped in, they found support here, pushed the price back to the start again and pushed it past the open, and this candle has started and opened at the top of this candle here. So a very strong bullish hammer, and had you opened your trade on this candle and closed it here, you would have banked 750 pips. So not to be sneezed at obviously. So that's your strongly bullish hammer. So let's now look at a bullish hammer. Okay, so now we're looking at a EUR CAD weekly chart, and we've got many weeks of sustained bear pressure terminated at this bullish hammer where price has pushed down, the bulls have taken control, pushed the price back. They haven't pushed the price back to the top of the candle, but this candle is actually opened below the close of the previous candle. So a very strong signal to buy. Had you bought anywhere near this level here and taken it to the top, that's 1600 pips. Okay, so now let's take a look at a bearish hammer. Okay, then we're looking at a GBP AUD chart, and we're looking at a bearish inverted hammer. Now I did say previously that most important candle patterns come at the end of trends. However, this is one of the rare continuation candles which you can look out for on your charts. In this particular case, the bulls have opened this candle here, driven the price north, the bears have leapt back in, shoved the price back down again, then closed. They haven't closed as far as they open, but they've closed here, and the next candle is continues the trend. It's another bearish candle, and it terminates here. This is a doji, a classic doji, or a spinning top. There's one here, there's one there, there's one there. They're all over the place. What these are essentially are indecision candles. It's where the bears and the bulls are fighting out on equal footing. No one's got taken control. Something always has to give at this point, and in this case it's the bulls have won, and they've driven the price higher for the next 2 weeks. So that's your bearish inverted hammer. I'm next going to show you a strongly bearish inverted hammer. Okay, so here we have the last of the hammers, the strongly inverted bearish hammer, and as you can see, very strong bearish trend. Price is moving steadily south. We get to this candle here. The bulls have had a go at taking control of this market, pushed the price up to here, which coincides actually and relevantly. So this is why you should always have pivots and Fibonacci on your charts. It's at the 38.2 Fibonacci. The bears have been gathered here, waiting for this opportunity to leap in, drive the price down, and they've driven the price back. So this candle opened there and it's closed there, so they've driven the price right back, and the bear trend has continued right down the bottom of the chart. So that's your strongly inverted bearish hammer. Next we're going to look at shooting stars. Okay, so now we're going to take a look at shooting star candles and hanging man candles. Shooting stars are reversal candles and will only appear at the top of a chart. They are of course the same as a hammer at the bottom of the chart. So hammers and shooting stars are mirrors of each other. Similarly, hanging man, we don't call continuation candles shooting star inverted or inverted shooting stars. They have their own name, hanging men, who knows why, but they are in effect the same as the continuation candles we've already discussed. So I'm not going to spend a massive of time, because I've explained already how these candles are open, close, and the highs and lows. You can follow the logic. Let's just look at some charts, and if we see this chart first of all, GBP CHF, we see a very strong bearish shooting star. Strong push for what, 1, 2, 3, 4, 6 weeks. Prices opened here, pushed all the way to the top, and the bears have entered the market here, pushed the price past the open, and continued down many hundreds of pips. So that's your strongly bearish shooting star. And if we look at USD CAD, we've got here two bearish shooting stars. Well, this is a strongly bearish shooting star, and this is a bearish shooting star, where it's a double confirmation. Again, prices, the bulls have pushed the price up here, the bears have rejected it, the bulls have had another go, pushed the price up here, the bears have stepped in, pushed the price down, and on the open of this candle the price has just plummeted, and that's again hundreds of pips there to go at. So those are your shooting stars. I'm now going to take a quick look at hanging men to tell you what those are all about. Okay, well, in this lesson we've had a look at engulfing bear candles, engulfing bull candles, hammers and shooting stars, and now we're just taking a final look at hanging men candles. This is a USD weekly chart, and here's an example of a strongly bullish hanging man candle. You will find these all over the charts. It's quite a common candle formation. Here we can see the candle has opened here, the bears have had a go at pushing down, it's been rejected, they've pushed back, they've pushed the price back past the open price, and this candle has continued the northern trend of this particular pair. And if we look at USD JPY, on here we can see a similar sort of thing. This candle's opened here. The bears have had a real go at pushing this candle down. They've failed. The bulls have stepped back in. They've pushed the price back up again, not as far as the candle top, but it's closed here, and the next candle has opened here, and the northern trend has continued. So that's your look at these candle formations. In the next lesson I'll be looking at dragonfly dojis, gravestone dojis, morning stars and evening stars. So that will be coming to you very